With the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, China's factory activity has expanded at its fastest pace in 5 months, and new home prices rose faster in November. What is the policy effect? And now let's begin with our top story. China's factory activity has expanded at the fastest pace in 5 months. The Caixin manufacturing PMI for November rose to 51.5 from 50.3 the previous month. The number remains in expansion territory above a rating of 50. The report follows the release of China's official manufacturing PMI, which came in at 50.3 in November, also up from the previous month. So what has really driven this expansion in China's manufacturing activities, and what does it say about China's economic momentum? For more on this, joined us on the line now are Chen Jiahe, Chief Investment Officer at Novum Archi Technologies, and also Yan Liang, Professor of Economics, Willamette University. So, I will start with you. First of all, what are the main factors contributing to the increase in China's factory activities, do you think?
Right. I think the major factor has to do with the incoming new orders that have increased at the fastest pace in about 3.5 years. So there are all these new product launches and also the new export orders. I think that is in anticipation of the U.S.'s tariff hike. So all these, I think, generate a lot of new orders for businesses. So that is the main reason, I think, for the increase in the manufacturing PMI.
And Jiahe, so how resilient is the high-tech manufacturing sector? And how did the manufacturing sector's improvement in supply and demand dynamics affect those key sub-indices like production in new orders in November?
Well, currently, if we look at China's growth, technology is definitely the most important thing that's stimulating China's economic growth. And especially when we are talking about the transforming of China's economy from the past to the future. Because look at the Chinese economy right now. We're standing at this very important threshold. That's about $13,000 per capita. That's when we're talking about the level of China's GDP. This is a very critical level that's separating many developing economies from the developed economies. If you talk about you having a per capita GDP of about 20 or 30,000 USD per capita, then you are a developed economy. But if you are talking about like a 10 or 8,000 USD per capita, then you are a developing economy. So China is somewhere in this very important threshold that we're transforming from a developing economy toward a developed economy. And if you look at China's size, we got something like 1.4 billion people, this huge country. We can't keep on relying on traditional things, for example, the things that we have been relying upon in the past, such as, export, investment, building a lot of infrastructure. Yes, it helped the growth of Chinese economy in the past 4 or 5 decades, but we can't keep on relying on them if we want to move the whole country into a developed nation. And that's our goal. So this means China has to use a huge amount of technology to improve the quality and the efficiency of our, factories, industries, consumption everywhere. So you can see China is putting a huge amount of effort into the growing of our own technology right now, both from the government, the business, and the people. We're having so many university graduates every year. People are studying the technology. Factories are, companies are investing into technologies as well. So the whole country is just moving towards this direction.
And so, we noticed the rebounding external market demand, particularly new export orders. So what are the implications for China's manufacturing sector and the economic outlook?
Right. So I think that just basically attests to China's, great manufacturing prowess. So despite all these international environments for Chinese exports, we're still seeing, China's manufacturing sector is very, very highly competitive. And so, you're seeing very strong demand in the rest of the world for China's manufactured goods. And I would just also echo what Jiahe was saying, that right now, China is really striving for, advanced manufacturing, and we have seen, for example, high-tech manufacturing production growth pretty much double the growth rate of the overall industrial output. And when you look at the high-tech investments in the manufacturing sector, that also grows at about 10%, which is close to triple the overall fixed asset investment growth. So that just means China is doubling down on the high-tech sectors, high-tech manufacturing, and it has been really improving its competitiveness. So we're talking about, new trails, the EVs, the batteries, and also the solar panels. Right now, China is really playing a dominant role and very competitive in all those three manufactured products. And so I think that not only helped to, improve China's own economic growth and its technological upgrades, but I think it's also a great contribution to the rest of the world for their efforts to make green transition. So I think China will continue to forge ahead in terms of a high-tech manufacturing, high-tech development, and continue to boost its manufacturing capability going forward.
And so, Jiahe, so what do you make of the domestic demand? The retail sales grew the most since February. So how do you view China's consumption momentum?
If you look for the next, 1 or 2 decades, as I am personally an investor, and we keep on, we are doing the value investing. So we look for how this country is going to move in the next, 10 or 20 years. And if you look at this, China's most promising sector among all of our economic sectors is the consumption, because currently China is having a relatively low amount of consumption compared with our whole economy. But if you compare the percentage of China's consumption in the economy to countries like United States, UK, Japan, you can find we are having a pretty low level of consumption compared with our GDP. So that means we are going to improve this, because China is taking like 1/6 of the global population, which means we can't develop just basing on the demand from other countries. We have to develop basing on the demand of our own economy as well. So China is promoting the consumption, and we can see the consumption is growing so dramatically in the past few years. For example, I have been discussing the topic of instant retailing last night with people. That's kind of a very new consumption in China's economy, that you make an order online and you get whatever you want within just about 30 minutes. This is really amazing. And this has stimulated a lot of consumption in China, because people find it so easy to just buy things. Click on your mobile phone, you get whatever you want in 30 minutes, although with a little bit more expensive price than the wholesale stores. But it's actually much more convenience compared with the traditional way of retailing. So this stimulated the consumption, and the instant retailing has been growing at, I think it's about 25% this year compared with last year. So it's 25% increase in one single year for this little sub-consumption sector. So you can see how large the potential that China's consumption economy is actually having.
And Yan, so in addition to the recent stimulus policies and measures, so do you see a need for more government actions to stimulate consumption or help the private sector?
Right. So I think, first of all, we need to recognize that, there is still the room for Chinese consumption to grow. Yet at the same time, I think we need to also debunk some of these myths about China's overcapacity, the very weak domestic demand. And so China has to export, its sort of demand problems in the world. When you look at what people were saying, in terms of, for example, China is dumping, cars in the global market. Well, the matter of fact is that, this year China expected to produce around 31 million cars, and the exports are expected to reach about 5 million vehicles. Now, this does make China, become the biggest car exporter in the world. And yet the car export is only about 16% of its total production, which means over 84% of the cars that are produced are still consumed within China. So this is a huge consumer market that desire a lot of these products. When you look at November, car sales reached 2.1 million. That's a 26% growth year by year. And when you look at the appliances and some of the audio video equipment sales, that have gone up by 39% in November. So again, China is a huge market, and it does have a strong middle class that desire many of these new products, both in terms of goods and also services. So I think that just shows that China does have a very large internal market. So the internal demand, consumption demand remains very strong. Now that said, yes, there's still way for demand to grow. I think yes, we could use more fiscal stimulus going forward. Especially we know that once Trump is returning to the White House and he has pledged to impose tariffs on China's exports. And so that means that China needs to develop a lot more is domestic market, right? Part of the dual circulation model. Mm-hmm. And so then I think, it makes sense to use more fiscal stimulus. Now, when it comes to the private sector, I think we need to provide a better and more sort of viable environment for the private enterprises. And the government could also, invest more in some of these tech sectors and public investments in some of the advanced emerging industries. And all of this will be helpful, to crowd in some of the private investments.
Mm. Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and also Chen Jiahe, Chief Investment Officer at Novum Archi Technologies. And after a short break, we'll take a look at China's property market. Stay with us.
Welcome. I'm Elaf Ellard, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
You're listening to Biz Today. I'm Zhao Yang in Beijing. New home prices in 100 Chinese cities rose by 0.4% in November on a monthly basis. Shenzhen saw the transaction volume double for the new and the second-hand housing. Analysts say these indicators show that the effectiveness of policies to boost China's property market. Meanwhile, China will implement more pro-growth policies to support the real estate industry further. A reduced property deed tax took effect just recently. So Yan, last month, China's major cities announced some new policies to boost the property sales, such as tax breaks on large homes and also the abolition of the so-called ordinary and non-ordinary home classifications. So what do these policies mean?
Right. So what this means is just to give extra incentives when it comes to the transaction tax reduction for potential home buyers. So previously, home buyers are spending, about 3% on the tax when they made transactions on housing. Now for the new houses, then the deed tax has reduced to between 1% or 1.5%, depending on the size of the house. And then for these second home, then the transaction cost now is about 2% instead of 3% previously. So I think this will be some extra incentives, but it's not a single standalone policy. It basically joins a slew of policies that have been rolled out at the end of September, right? And so that includes, for example, mortgage rate cuts, down payment cuts, some of the relaxation of home purchases in major cities, and then some other from more supply side stimulus, like, for example, the whitelist policies that allow developers to have more liquidity to finish the incomplete housings. Also, the PBOC has set up some liquidity lines for businesses and for local governments to purchase existing housing units. So all of these, I think, are very supportive policies that have, at least from the early, indicators, that we have seen the housing transactions really ramped up in October and also in November. And the housing prices seem to increase in some of the major cities. So I think all these shows that these policies have produced positive impacts on the housing market and stabilized the housing market and housing transactions at this point.
And so, Jiahe, so how significant are these moves as China tries to stabilize the market? And how would you describe a healthy property market in China?
Well, when we look at these policies, you have been supporting a lot for the people who wanted to buy their homes, both their first home and their second home. You can see these policies are helping people from many extents. I mean, currently you have to pay a very low down payment price compared with before. I still remember when the property market was pretty hot back, like 3 or 4 years ago. If you want to buy your second home, you probably have to bear like 80% of the down payments. The government were trying to contain the property price back then, but now you pay as low as something like 15% down payment. So that really means a very small amount of money compared with like 4 or 5 years ago. I mean, if you buy a property, for example, cost you like 2 million RMB, you only have to pay like 0.3 million RMB in advance. And consider the fact that the interest rate for mortgage has also been reduced. So this means your mortgage monthly payment is also reduced compared with the previous level. So this has been a pretty significant help to the people who wanted to buy the properties. And we have seen a lot of people currently buying or people are selling properties. The property market is just coming back to be more vivid compared with past. And if you talk about how would the property market be healthy, I would say one of the very important things to consider the property price to be really healthy is the rental yield. You have to get a rental yield that is somewhere between 2.5 or 3.5%. And if you get to that level, which means you buy a house and that's a pretty fair price compared with renting. And because the rent is also decided mainly by the people's monthly income, this also means that if you get a proper rental yield, this means the property price is a reasonable price compared with people's income. So I would say rental yield is something that you want to look at.
And so, so of course, the government want to stabilize the real estate market. The government doesn't like to see sharp prices swings going up or going down dramatically. So how would you describe a healthy property market in China?
Right. So I completely agree with you. I think, it is a policy intention to stabilize the housing market, because housing market affects the economy greatly from both the supply side, when it comes to housing sector investments, but also from the demand side when it comes to, households' wealth and their consumer demand. And so that's why I think it's important to stabilize the market, to provide some support to stabilize the entire economy. Now, that said, I don't think the government wants to go back to the old way, which is to rely on the over-leveraged real estate sector and investment in the housing sector to drive economic growth. So when it comes to whether or not this housing market has reached a sort of an equilibrium, I think I agree with Jiahe. On the one hand, you need to look at rental yield. On the other hand, I think you should also look at, for example, how much is the real estate sector's contribution to GDP. So we know in the past, the real estate sector, including some of the upstream and downstream sector, contributes to 30% to the GDP. Right now, after 3-4 years of adjustments, I think the real estate sector's contribution to the GDP has gone down a lot more, right? So now we're looking at 15-18% of the GDP that is accounted for by this sector. And I think that in some ways is quite aligned with countries like the United States, slightly higher than Japan and Spain, but still we're not looking at a very large oversized real estate sector anymore. And I think, again, going forward, we need to also think about some of the long-term structural factors that would affect China's housing market. Right. So, for example, we're talking about an urbanization rate of only 65%. So we still have another 10-20 percentage points increase in urbanization. We continue to see, marriage and primary school enrollments that actually have gone up in 2023 compared to 2022. We're also seeing people upgrade their houses, not just in terms of floor size, but also in terms of, making their homes smarter. So there's a lot of, these needs to upgrade, to renovate. So I think that would provide some support to the housing sector demand. Not to mention the government have been has been, providing the kinds of social housing projects. So I think all of these would provide certain demand to support the housing market to stabilize, not grow as much as used to, but at least not continue to decline as we have experienced in the past few years.
And yeah, also China's household registration system, or hukou, is an important factor in the real estate. And in Guangzhou, one of the first-tier cities in southern China, new measures were introduced to enable the home buyers to gain the local residency. So Guangzhou will become the first top-tier Chinese cities to use this method to revive the home sales. So how significant is this move, do you think?
Well, I think as far as the housing sector is concerned, we see this kinds of relaxation of housing purchases, started earlier this year in Hangzhou and Xi'an, and now, in Beijing, Shanghai, Guangzhou, Shenzhen, especially Guangzhou, as you mentioned, they completely removed the housing purchase restrictions. So as far as the housing sector is concerned, I do think that it creates a large positive impact on the people, right? Because in these large first-tier cities, the desire and the demand for housing is very strong. It's in Chinese, we call it gangxu. So there's a lot of demand for housing in these first-tier cities. These policies are going to be beneficial.
So, Jiahe, on the other side of this market are the developers, and most of them have experienced the cash problems or other difficulties. And the government has set up a white list of developers who have more room to get credit to finish their housing projects. So, what kind of effects will that have on the property sector?
Well, when we look at the white list, it's a government's action to save the property developers who are, who are still worth of saving, because this market has been bullish for over almost 2 decades. So some of the and actually many of the developers have been over leveraging, and that's causing a lot of problems in the recent years property markets. And when the government is looking at this market, they can't say, okay, we're not going to do anything. So you put up this over leveraging yourself, so you're going to bear all the consequences. They can't do this because that will bring a lot of damage to the economy. And the property market as well. But they can't just say, okay, we're going to save everyone, so you're off your burdens and we're going to pay your leverage whatsoever, and you're happily walking away. And this is not right either. So the government is setting up this white list. They are trying to pick out the property developers who are still worth of saving. And we can see that this program has actually helped the property developers who are really worth of saving a lot. I mean, because they've been entering all these white lists, they get more financial support from financial institutions. They get the loans extended. They get their cash flows more abundant than before. And because they have been entering these whitelists, the market is becoming more confident toward these property developers. Consumers say, okay, you're entering this whitelist, and we can see that you're getting more financial support. So we're more daring to buy your properties, and we're being more confident about your ability to deliver the products that you have promised to build. I mean, the properties that you have promised to build. So this made the property market, back to life again, and the liquidity is coming back. So this is really a useful action for both the property developers, the property market, as well as the consumers of properties.
And Jiahe, also some analysts say that the younger generation's attitudes, or they have some psychological changes, they are different from the older ones, because young people are less trusting of investing in the housing sector. So what do you make of that, and how big of an effect will that have?
We can see that this attitude toward property market has been changing in the past few years. I mean, if you go back to the year of 2020 and you ask people how's your viewing about property, I think it's about 95% or 98% of people would tell you that, yeah, you're going to buy it, it's going to rise forever. And this is not a right attitude, because if in a society you got 98% of people believing that property price is going to go up, it's not going to go up. And another very damaging thing to the society is that because everyone believes that property is going upward, so people are not investing in anything else. They don't say, okay, I'm going to open a shop, I'm going to invest in some technology, I'm going to go to, pay more tuition to go to university. They just say, let's collect the cash and go to buy properties. That's not a right thing, because if everyone thinks it like this way, all the capital of the society will go into the property sector. That's wrong. So this attitude has actually been changed in recent years because the property price has been falling down from the peak level that was back in 4 years ago. And people start to think, okay, the property price is not going to rise forever. This is a very right attitude. I mean, look at this. You're going to buy anything. You're buying stocks. You're going to buy cars. You're going to buy some daily consumption products. You're not saying that, okay, I'm buying this and I'm making money tomorrow. I'm making money next year. You would consider the risk. And people start to consider the risk about property right now. They're much more cautious about property. They say, okay, am I going to buy the property because it's going up forever? No, I'm going to buy the property because I want to have my first home. I want to have a larger home. This is the right attitude toward consumption. So we can see this attitude has been changing. I think it's a very right thing for the society.
Mm-hmm. So Yan, so what do you think about this attitude change?
Well, I think in some ways, this reflects the young generation's desire for, more flexible lifestyles and also more or different choices. And I think that is good, right? That means, on the one hand, I think I agree with Jiahe that this is good for the macro economy because it allows for more productive uses of capital. But I also think that it's helpful for, these young people because it gives them the flexibility. They can move from city to city to look for the best jobs and to look for the best lifestyles that they prefer. So I think in that sense it's good. But at the same time, I think, China's rental market needs to be developed further. Right now, I think when people are renting houses, a lot of times they're renting from individuals. And so I think there is a large potential for the commercial rental market to develop. And I think that is also the next bright spot, I think, for the Chinese housing market to develop.
Mm. Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and also Chen Jiahe, Chief Investment Officer at Novum Archi Technologies. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.